Robert, did you know that the real estate market in Ontario, specifically Southern Ontario, is crashing? Crashing.
Sounds like clickbait headline to me.
The question is it ours or is it the Toronto Stars? But anyway, we're going to get into that in our today's episode of Real Estate Chat with Robert Eid and myself, Jonder Perez. And I'm going to pull up the article here so that we can get started. This article reads, some real estate markets in, let me just move this here, Southern Ontario are already crashing with price drops of more than 30%. So if we scroll down here, we'll see that this particular article, they use this neat technology called heat graphs where they show the drops in terms of prices and where they are. And we're seeing some of these price drops as high as, where is that? Like that 44% plummet in Scugog. Did I pronounce that correctly, Robert? Scugog? Scugog. I always got that wrong, but I got it right this time. 44% whopping drop in Scugog. So we're going to share the link of this article, obviously, in the video so that you can access it. You can see for yourself that this isn't our clickbait. It's somebody else's clickbait.
The thermometer underneath the thermometer is worth pointing out. White
thermometer, exactly.
0, and then red and blue are on there. There's blue in the center of town, which is up, and then flat is white, and then increasing amount of color is down. So there by Lake Scugog and Scugog Island is where they're talking about there. Oh, perfect. It shows.
It's a whole bunch of stuff. So yeah, when you click on this link on the description, you'll be able to see that. You'll be able to fill around with it, right? But the point here is that the real estate market is crashing, and they provide several reasons for this. They talk about during the pandemic how people wanted to work remotely. There was a flight from urban centers and subsequent spike in their suburban house prices. All of that until the run-up of the proverbial peak of the market, February 2022. Prices skyrocketed in Durham, Peel, and York, and then the bubble burst when the economy reopened and interest rate begins to climb. So there's a lot of commentary in this. There's talk about which specific areas in the neighborhoods of Toronto, for example, were the most and the least affected, and also some narrative about, in terms of when are the most highest prices sold and how that affects average price. But that's what we're going to pick Robert's brain in today as we go through some of the preliminary numbers of what may come out as January 2023 figures on TREB's Market Watch coming out in about 2 weeks, when coinciding with what's the meeting here with the Toronto Regional Real Estate Board.
And last year's summary. It's an annual event. It's a big deal. We all go to it as a mini convention. It's great.
And we'll
10th of February.
And we'll do some content on that as well. So Robert, I'm going to pull up your slides here, and we're going to look at, is the market in fact crashing? Are these prices, are they astronomically huge, or did we already know about these? And then relative to past history, recent history, is this a drastic thing that should be worrisome, or is it just becoming amplified and typical of the media to use words such as crash in what they have to say? Before we get to that, make sure that you subscribe if you like what you're hearing on Real Estate Chat. And if you agree, disagree, if you have any questions about what we're talking about, please be sure to type in some comments below. Let's jump into it. Robert, I'm going to share your chart here. And what are we looking at here first?
Okay, we always start with sales. So the end of the month was yesterday. And so I was projecting there was going to be under 3,000. And it was quite a rally in the last 4 days of more like 150, 148 sales per day, which boosted up our average to 3,008. Now, 3,108 is still a lousy market. It's the 23rd best market in the last 27 periods. But there it is, way underneath all the other ones. The only one that's underneath it is 08, 09. Now, this is the non-standard school year look at prices. We do it for sales as well, so that it shows the way people actually work. It starts in September when the school goes back, and the low point is the Christmas, December, January break, and then it moves into the spring rally always, and then it tapers off for July and August at the end. Otherwise, January would be jammed up against the starting point on the extreme left-hand side, and you just wouldn't see it relative to anything. Here you can see with these big starry things as we come across from the start of school is it's consistent pattern like the average of every year. Unfortunately, it's 35 to 45% below the 10-year average. So someone would call it modest. I would say it's lousy. 50% below a boom year. So the thing is, there's enough sales that are going on so that prices really are not falling. The article, we can talk about the article and the crashing and everything like that in a second. But looking at this chart, which we'll put on my blog and along with this video so that you can play with it and look at it and blow it up and do everything you want to. But there we are following the regular pattern of every year with a low point in December, January. So guess what? That's what we got.
And the interesting to point out, as Robert talked about when you're using words such as crash, which is very amplified, is the fact that that article only really looked at the prices, and there's a ton of variables. Yes, they talk about interest rates. Yes, they talk about the reasons, the flight towards the suburban and out of the GTA areas, which resulted in a spike of homes and then a subsequent drop or crash if you're using their wording. But you've got to put into context as well and this is why Robert wanted to open with this in terms of number of sales, what kind of homes are selling at specific times. And when you're comparing the time periods and you're saying it's a price drop of X, well, what is it contributing towards? Like what kind of homes are selling at that point? And so we look at Robert's next chart, which talks about the net new listings per month and how that also affects the average price and what's going on with the market dynamics. Robert?
Okay, this is not about crashing. It's not about statistics. It's about a pattern again. Now, this is as yet incomplete because only the number that is put out by the Toronto Real Estate Board as far as new listings can go in here. I've estimated it as 7777, which, can't be right, but I've estimated it. And then I've also picked 22% of that, 22.5% of that as the amount of relists, where of all the new listings that they count as new, a certain percentage of them are actually terminates, and then the same broker with the same owner with the same property puts it back through again after 4 days, after 14 days, after 24 days, within the first listing period, and changes the term. Sometimes they go from offer date to no offer date, from low price to high price, from price reduction, which we used to call a rerun, and calculate and watch as reruns as a market metric. In this case, they're saying that they're all new listings, which they're not. And it's overestimating the number of new listings and throwing off the ratios, which we're not going to get into right now, because all we've got now is my two best guesses at what the number of new listings is going to be and what the number of relists is going to be. So my calculation says 6,027 new listings, that's that red line with the arrow, were created. And that's below the average number for December. In 10 years number is 8,840, and the 5-year number is 86. So there's a fewer number of listings. We had a very slow start. Maybe that has something to do with it. We have a goofy year going on. We got a lot of fear. We got a lot of apprehension. We got a lot of people saying, I don't know what to do. Should I put my house in for sale? Is it too early? So listings are down. So sales are down, listings are down, but the ratios are exactly the same. And what we're talking about is information that won't be widely available for 2 weeks from now. What the previous article that we topped off was talking about stuff that happened a year ago, ending in December, which is almost a month and a half ago. And so it's completely out of date. What also that article talks about, and most commentators talk about, is the pandemic. It's not about the pandemic. It's about a lockdown, a work from home phenomenon, a reaction from the central bank that reduced interest rates to very, very, very low, like 0.25 for their central bank rate, and then said, we're going to have them low for a very long time. People relied on that. Then when different data came out and they said, oh, inflation's raising its head, and they said, no, it's transitory. Like, don't worry about it. They didn't change interest rates. And then all of a sudden they said, oh, we're wrong again. And they janged up the interest rates, which just caught everybody on their heels. Everybody would get a variable rate. Now they're really scuppered. Oh man, what an upset. So we're dealing with all that in 2023. But forget about it being a pandemic. It was a lockdown and a work from home phenomenon that now I can remotely Zoom and do my job.
Very interesting. And it's good to note that detail because of the fact that, yeah, I mean, I've been guilty of using that terminology myself, pandemic years, because that's what everybody's known to refer to it as. But when you pick apart
low interest rates, too low for too long.
Absolutely. So when you pick apart what caused this and what the specific details are when it comes to lockdown, low interest rates all of a sudden becoming increased, like pressing the gas pedal and you're just jamming right to the floor, all of a sudden to correct what's going on with the marketplace, or the other analogy is pressing the brakes so hard, right? You're going at X speed, the market's shooting all the way up, then you jam the brakes. That's probably the more correct way to say it. What do you think is bound to happen? Of course, prices are going to go down. And interesting to point out that, yes, you got to look at when you're reading any of these articles or relying on any realtor or media or commentary, what is the data based off of? And so Robert coined this slogan is like, we're just slightly ahead of our time, right? And you borrowed that from, whoever you borrowed that from, but Panasonic, sponsored by Panasonic. Well, there you go. Stolen by cop. Anyway, you've got to look at all of these figures. And what you've got to look at is the indicators that, yes, that article might have been relevant in December, and you could talk about that all day long. We're talking today about different market dynamics that, whether you like it or not, are changing and will change. Now, it doesn't mean prices will spike all of a sudden, but it does mean that the price movement, if you were to rely just on that piece of information, you would not be in a position where you'd be competitive in this marketplace. So let's talk about being competitive in this marketplace by looking at the numbers and how they've moved. So for those of you who are watching this, for those of you who subscribe, thank you. For those of you who have not subscribed yet, make sure you click subscribe, make sure you click like, and put in your comments. We love to hear and read comments and respond to comments. But you'll see that Robert and we pull up this chart that is Robert has composed, and we bring it up in multiple episodes. Depending on what we're talking about, we always refer to it. Now being the end of January, beginning of February, what are we looking at here, Robert, in terms of how this may have changed and what your prediction or forecast is of where January prices will lie? And what does February look like?
This chart works from the bottom up. I've been compiling it for over a year. And what it does is compare everything to the peak in February of 2022. And then it looks at each successive month, December, January, February, relative to what has that month done for the last 20 years relative to the previous one. So in this case, what is it? I can't read it fast enough. The large preponderance of the time, there was up months from December to January, as that average was 1.26%. So you can almost count on the price in January being 1.26% above December. And I've used that, saying that the average price will be 1,064,461 when they announce it next week. And then saying, okay, plus or minus what? Plus or minus what? The current trend for the 10 months that went from February to December in 2022 was minus 2.12. So minus 2.12 takes us to, I think it's 1028. So 1028, 1064, it's not a big difference, but it is comparing the two ends of possibility. So I think that's where it's going to come in, and it's going to show that prices are pretty much flat, going down 2, going up 1. And from there, we do an extension with the yellow shaded numbers of what happens if We continue on to lose 1% per month for the next number of months until we get to the end of the year. That's where I started with, and that's where it is so far. And then was it a double-digit change? Because we've had like 24 out of 26 consecutive months of double-digit increase during the boom. It happened one time before in 25-17 that nobody did anything about. The whole problem is interest rates were too low, and they were left low for too long, and then all of a sudden where they were raised too fast, what they should have done is not gone so low, then they wouldn't have to have a big reaction and not go so high now. But you can't go back. All you can do is deal with what you've got. So there's my prediction, somewhere between 1028 and 1064, 1.064 million. And so flat prices, not crashing, flat prices. But again, that depends on the mix of the just around 3,100 sales that were made across the grand and wide and diverse GTA, Greater Golden Horseshoe, in the month of January, and what those all average out to. Were there a lot of $5 million homes? Were there a lot of 750,000 condos? What was it? The average will likely come out to that because Januaries are mostly the same.
So the market isn't crashing. The market is not crashing. It's flat. In a worst case scenario, it's flat. Now, crashing implies that it's going to keep going down. Market crash, I mean, if you want to use that terminology, if you're looking at if 44% or whatever percent is a crash to you, then that's a crash. But what's currently happening is prices are stabilizing. They're remaining flat. And whether it's the circumstances of the real estate market, as Robert pointed out in his chart with the seasonality, that prices go up in the spring because sales go up in the spring and whatnot. And the average prices of homes, typically in a sample of sales, are higher priced, right? So if a $3 or $4 or $5 million home sells in the spring, whereas that kind of a home does not sell in the middle of winter, of course, it pulls up the average price, as Robert has pointed out to me many, many times before. Let's look at the estimated active inventory, because Robert, the active inventory also dictates what kind of price, because we're talking here about the demand part of it. The supply part of it is, of course, sales, which we're going to start to see going up. What does inventory look like?
Okay, I chart inventory, condo, and freehold separately every single day. And so my chart is normally off by .125 at the end of the month from what the TREB number that comes out. So I adjusted my number by that amount and predict that the inventory snapshot at the end of January was 96.39 compared to the 10-year average of 96.93 or 88.35 the last 5 years. So we are bang on normal for inventory for January, because January is not a hot month. January, half the time people are on holidays. January is sometimes dead, snowy, terrible. January is cold. People are on holidays. So January is not what you base anything on. What happens by the 15th of March is what you base things on. But so far, flat is the new up, and we're bang on all the averages.
And so you're looking at low inventory, relatively speaking.
No, this is the average for the last 10 years.
Okay, sorry, I should rephrase. Compared to previous Januaries, we are seeing lower than previous Januaries, but on the average, we're just right at the average. So neither high nor low.
Of the last 10 years Januaries, okay, you're .5 off it. Those are just January averages. The other ones are, what was January 2010? Again, just above the current average. What was January 09 when everybody was mid-panic? Was way up over 20,000. So
we're average January, yes. So we are average January.
Normal, yeah.
Normal, well, average January.
Yeah. It's not crashing.
It's not crashing. So that's the conclusion, right? So I hate to spoil it for those who hate, or the real estate haters, right? That, real estate market's crashing because of higher interest rates, affordability has been affected. Certain things are true. Yes, interest rates are higher. Mortgage payments are higher. If you're looking at mixed payments, variable versus variable rates, and your principal payment versus interest rates, principal versus interest. Of course, you're paying more interest than principal. You may have gotten a trigger notice that, look, you've got to increase your payment. Otherwise, it's not enough to cover your principal plus interest compounded payments. And so if you're looking at prices from peak, yes, they've fallen. If you want to use crash, sure. You also have to realize that that was a factor of interest rates, which affected affordability, which shook up confidence by the consumer, which affected the demand side of things. Supply side of things is perfectly normal. It's average, but things that you would normally expect. Sales are starting to pick up, as would happen normally anyway, seasonally. So time will tell what prices will look like. Robert's guess 1.06, 1,064,000 for January. We'll see how close he gets to that. And for spring, again, factors of supply demand. Will their most recent interest rate announcement that they didn't push it up too much, and they're hinting at they may not do anything in March, coinciding with the busy spring market to mind you, will that affect where prices will go? Will prices start to increase because of seasonality? Because that's what happens anyway every year, spring, because of consumer confidence returning to the marketplace, because of what buyers and sellers are seeing actually happening in the marketplace, multiple offers, tight demand, lots of showings are starting to happen, or is this just all normal? Right. The biggest thing is a crash is not happening.
Well, we're going to have more. Sorry.
Yep, go for it.
Have more of this type of reportage because we're just heading into the peak of the for a year ago market. So we're anniversarying through the peak February, the peak March, the pretty darn high April, and the pretty darn high May. And so a 1 year change is all going to be minus 27, minus 36, whatever it is. And the Toronto Star will have a field day in reporting what happened a year ago. And if they did a 2 year change, which we have on our chart that shows a better perspective than 1 year, 2 year change, we'll probably see that it's nowhere near that if you bought your property 5 years ago and whatever it was worth 2 years ago is what it's worth now. And you have a boom and a bust, but now you're back to where you were. So fret not and watch for the next month for new listings to show, a lot of new listings to show up. They'll be encouraged by the results that come in January, and the number of sales to increase proportionately. So practitioners will almost have enough to do, but anything that sells right now is underlisted by 20%. It's underlisted by 15 to 20%, and so it gets the 5 offers on it. And many people are misrepresenting that with sold for 140% of asking price because the asking price was too low. And their target was always what they got, maybe 5% less than what they got. They were happy that they got 15 offers, which puts it over, which is the same nonsense we were going through, just strategy of listing agent who wants to make sure that that house sells next. And so it's very good. Like the guy's bought, he's got to sell, there's 4 other competing. Let's make sure we get the buyer to come to ours next and to buy. Okay, fine. All things pass, and this will pass too.
So stay tuned for that. Yes. And again, because we are comparing ourselves to high prices last year, it's not going to be a surprise. And it certainly will not be a surprise for you because you watch the Real Estate Chat. Thank you so much for watching. Thank you for your support. Tell everybody about us and let them know what we do and what we talk about. And make sure you join the conversation by typing into the comments below. Thanks, and see you at the next episode of Real Estate Chat.
See you later. Bye for now.
Bye for now.